What are your expectations? Obviously, there's been a lot of exuberance and excitement going into this listing. It really does kind of feel like a revitalization when it comes to the IPO scene in Hong Kong.
Well, I just think that with the risk of delisting in U.S., obviously we're seeing more ADS coming to Hong Kong, and a lot of these are probably like the ones that have like a super voting structure, dual class structure. So I think the big ones are all trying to come back. So I think it should be pretty good for Hong Kong IPO market.
Right, and pretty good for China tech names, right? Chelsey, I want to throw up this chart on the Bloomberg terminal, taking a look at JD versus Alibaba, obviously its main rival when it comes to the e-commerce sector. Yeah. We still see much greater and faster revenue growth when it comes to Baba versus JD. So, on the balance of things, do you have a preference for either stock?
Well, so I think right now for us, we think JD is very fairly valued. So Morningstar derives our fair value using a very long-term perspective. So I think it has shown a lot of strength, especially amid COVID. And the first quarter revenue growth was really strong, and it really beat its guidance by a lot. So I think it has largely played out. I think it's still a good stock in the long run. I continue to believe that there will be margin expansion. But right now, I think I prefer Alibaba, which in our view is undervalued, because obviously they had some hiccups during COVID. But then I think they have already, like their GMV in Tmall, for example, I think it has already recovered to the December level. And then we continue to see, for example, the promotion in the 618 shopping festivals. I think that obviously with Alibaba's huge ecosystem, they will definitely catch up, and they are really strong in new products and like a platform for launching new products. I think it's this indispensable platform. So I think right now, just based on valuation, we prefer Alibaba more.
On that June 18th, 618 shopping extravaganza, how are those two companies expected to perform? And will we see the nascent economic recovery, consumer spending recovery in China reflected?
Well, obviously, I think if we look at the May retail sales number, is still down. But then I think for online sales, I think it's been up. So generally, I think we continue to see that online is taking share away from offline. Obviously, JD.com is the one that sort of initiated this 618 festival. So they really focus on this festival. This is sort of like the main shopping festival. And Alibaba and Pinduoduo, like they're all competitors, right? So obviously they are also trying very hard. And I do see them like having subsidies. For example, Alibaba, for certain stocks, inventory, if you buy 300, there will be a $40 discount. So I think competition is really intense because brands are really trying to sell inventory because the inventory got stuck amid COVID, so they really need to clear inventory. So I think generally I'm expecting that this 618 festival should have a pretty good GMV in terms of clearing inventory.
And Chelsey, we continue to see the outbreak spreading across Beijing. If we do get a second wave, what will that mean for, say, gaming that got a really good boost during the pandemic period when people were locked up in their houses? We had seen Tencent give a little bit of a cautious guidance when it came to ad revenue, at least.
Yes. So I think, honestly, the second wave really depends on how large it is, and then basically the main thing to watch is how many people have to stuck at their home and how long that is, right? So apparently in COVID for the whole Chinese New Year, like it was a pretty long period. Everyone was pretty scared, and there were less testing and all that. But then I think now, right now we're seeing that in Beijing, but it's not like all over in China we're seeing a second wave in a very severe way. So I think right now I would expect that the second wave's impact on online, like online sector, will be less compared to the first wave, for sure.
And do you actually see potential second wave of upside, if you will, when it comes to valuation gains for the kind of stay-at-home stocks, particularly as we see the likes of Nintendo, which has obviously been a big beneficiary, jumping today, partly on these concerns?
Well, sure, of course. Like whenever there is whenever a lot of people have to stay home, then generally speaking, this online sectors like internet sectors will benefit. But I just think that but I just think that the impact will be probably less compared to the first wave, and I think that's the sort of key focus I have right now.